In this video, we're going to be looking at the exchange traded fund, also known as the ETF. In the 1980s, ETFs were introduced and have been gaining popularity ever since. Within the last 10 to 15 years or so, they have been gaining popularity at a much more increased rate. I do believe this is because more people are now experienced with them and more are informed as to their advantages and what exactly ETFs have to offer. Now, ETFs are traded on the market, much like stocks. However, they do have a manager. Much like you are a portfolio manager of your own portfolio, there are managers who do similar things with the ETF. For example, a manager of an ETF is responsible for selecting the specific assets that happen to follow into the ETF that they want to build. They have to choose the asset allocation, so the weightings of each asset that they place in the ETF, and they are also responsible for rebalancing their fund at the specific interval that they choose. Now, ETFs can be broken into several different classifications. They can be broken into index funds, commodity funds, industry funds, as well as even bond or fixed income funds, specific niche funds you will find, as well as even dividend funds. So as you can see, there are a whole bunch of different ways that ETFs can be broken down into, making a bunch of different selection options for you to choose from. Let's take a look at the primary advantage of ETFs and what that may consist of. The primary advantage of ETFs is diversification. Imagine having an ETF that contains 60 stocks where 2 of those stocks happen to have poor performance. If you happen to own those stocks, you better believe that the poor performing stocks is going to cause your portfolio to head south. That's not the case with ETFs. If you happen to have those 2 that are performing pretty poorly in your ETF, you may not even notice much of a price change at all. The diversification of the ETF allows much less risk when selecting the ETF. This also makes it much more easy for portfolio maintenance. If you wanted a diversified portfolio with stocks, that would mean that you have to purchase several of them. Not so much with ETFs. You purchase one ETF and you're already significantly diversified. This way, in time, when you rebalance, you don't have much effort really to do it. You just need to balance the ones that you actually have, which generally consist from anywhere between 4 and maybe a maximum of 15, 20 ETFs. Where if you want to do the same thing with stocks, you'd have a big multiple of that number. Now, we did mention that ETFs are traded on the market. And they do trade very similarly to stocks in the same fact that they share the same characteristics, the trade characteristics. For example, you can still short sell an ETF. You can also still buy an ETF on margin. Not that those 2 things I'd recommend. However, you need to know that it's still possible if that's for you. And unlike mutual funds, you can also follow the price through a particular day. Now, this might not be important. However, it does serve as an advantage over something like, let's say, the mutual fund. Now, there is one advantage that I happen to like, and that is from my broker. My broker does not charge a fee in order to purchase an ETF. However, I couldn't really find a broker that does not charge a fee to purchase any stock. So I do see this as a specific advantage for ETFs in general. There are brokers out there willing to provide that feature within the broker. Now, one of the things that is an advantage over, let's say, a mutual fund is that an ETF, although it does have a management fee, it's much less. So the management fee of a mutual fund is much higher than an ETF management fee. Now, if we look at the disadvantages of an ETF, that happens to be a disadvantage if you're looking or comparing against a stock. If you compare a stock's management fee, which happens to be just about 0 is a lot better than the management fee of a typical ETF. You can expect to see management fees ranging from anywhere from 0.2 to about maybe, let's say, 1%. And that would be a pretty typical number that you'd see. Another disadvantage of ETFs is the simple fact that if you look at stocks, you happen to have a very wide selection that you can choose from. No matter what, you can always find new stocks that you haven't even heard of before. However, with ETFs, because ETFs contain a whole bunch of different stocks or fixed income commodities and so forth, there's a much less or not as big as a variety as you would expect with stocks. For that simple fact, it is or does serve as a disadvantage. Now, another disadvantage that ETFs have, and I don't think it's talked about as much, is let's call it like the dividend disadvantage. So if you're looking at a specific dividend fund, and if you were to compare that dividend fund to, let's say, a stock, there is quite the difference. Now, if you do select a stock that has a 5% dividend or even better, you get that 5%. However, with a dividend fund, you get a dividend that is generally made up of all the different funds that you happen to have in that ETF. So what that means is it actually averages out. Since most stocks, let's say, do not have very high dividends, if you're averaging about 100 of them out, the dividend that the ETF will provide you with would be much less than, let's say, that one stock. Now, of course, that one stock is not that diversified. The ETF is. So that's how you kind of counter that. Now, if we look at what makes an ETF a great purchase for investors, I do believe that the great advantage that it does have is what we talked about, the diversification, the maintenance. There's very low amounts of maintenance and very diversified. This is why we prefer to use ETFs in our portfolio over any other asset. Now, if you want to learn a little bit more, don't forget to hit that sub button so you can make sure that you're here right when the next video is released. And we'll see you in the next video.